Good morning, everybody, and welcome to the Hardcore Mortgage Real Estate Business Podcast. Today is Wednesday, December 7th, a day that will live on in infamy. Today is National Pearl Harbor Remembrance Day, and it is the 81st anniversary of the attack at Pearl Harbor in Hawaii. We should always make note of those things, and it is a day that will live on in infamy. With us today, we have Miss Lisa Lawson. Good morning, Lisa.
Morning, everybody.
Mr. John Kolb. Good morning, John.
Good morning, all.
And Mr. Harvey Freed, the host of the most hardcore mortgage real estate and business show, heard every Saturday morning on 97.1 FM here in Detroit from 9 to 10 a.m. Good morning, Harvey.
Good morning to everybody.
Also, we will be joined a little bit later by Kevin Stewart from the Stewart Team Real Estate out in Rochester. Kevin, always a welcome addition to our program, been on the podcast before, and the show, which he will be on this Saturday with us. And we look forward to having Kevin on. But I want to bring something up, ladies and gentlemen, and I'm going to go to lady first. There's talk about what's really happening in the real estate market. And there's Kevin. Good morning, Kevin. How are you today?
Hey, guys. Good. How are you?
Good. We're just getting started. We're going to talk about all things related to what's really happening in the housing market today. And then, Kevin, one of my favorite topics, realtor and mortgage LO relationships. What do realtors really think of loan officers? And we'll talk about some of the key things that go on and obviously your relationship with John and talk about what's important to you. But first, I want to jump into some things, okay? Really understanding, Lisa Lawson, what is going on in the housing market. And I want to go around, and I'm glad that we have Kevin here today. But Kevin, with all of us, there was a panic early in 2022, March, April, with rates going up. But what is really going on, in my opinion, in the housing market is really more of a return to normalcy, but with a positive aspect of it, because I believe, having been doing this for a very, very long time, spanning 5 decades, if you believe that, this is temporary. The housing market right this second, as we're sitting in here, it's a temporary situation and it's going to change. And Lisa, there are some whys. The whys are, as John and I have pointed out many times, the Fed overreacted and raised rates too quickly. That's temporary. There are plenty of home buyers out in the market that want to buy homes. So this is temporary. The median age, which we're going to get into, of a home buyer right now, first-time home buyer, is 34. That means 27-year-olds to 41-year-olds. If the median age is 34, just do the math. Birth years from 1982 to 1996 are all in play. So that's why it's temporary. Lisa Lawson, it's temporary, right? You've been through this before.
Yes. I mean, we've always said the mortgage industry and rates and how this works and the home buying industry is like a cycle, right? It's cyclic. So you have ups, you have downs, you have downs, ebbs and flows. And right now we're in the middle of I would call more of a normalization. So it was a seller's market. The sellers got to call the shots. The sellers got to make all the rules. And now things are kind of shifting, and it will shift again and it will shift again. I mean, that's just the way the market works. So everyone's like, don't buy a house right now. If you hear this stuff all the time, you're going to buy. It's the wrong time of the market. This is the perfect time because some of the competition is gone. So a year ago, you might have to make 10, 12 offers to get one accepted. And you're probably going to have to make way less than that now to get an accepted offer. A year ago, you would be lucky to get any seller concessions. Nobody was paying cost. You'd be paying over asking. None of that's the case. In fact, my last 2 purchase agreements came in under the list price. So, and there were concessions on one of them. So this is the opportunity for buyers who thought they couldn't play in the previous market to come play and actually get an offer accepted and get the house of their dreams.
Yeah, I think those are all great points. I'm going to go to Kevin Stewart. He's the man on the street in the real estate industry. Kevin Stewart, Stewart Team Real Estate in downtown Rochester, Michigan. Kevin, people aren't waiting, are they? I mean, if they're waiting, they're just going to lose out. If they find a house that they really like and they just sit on the sideline, somebody else is going to snap it up. There's still a shortage of inventory. Again, housing market, it was temporary. I see people coming back in. I see them jumping back in. They're not waiting anymore, are they?
I don't really see people waiting right now. There are plenty of people that want to buy a house. The biggest issue we still have, it's the same issue we had last year. We have no inventory. We don't have products that we are bringing to them. We have this problem where everyone has decided to sit on their hands. And so they're not putting their home on the market because they're scared they can't find something. And so therefore there's no inventory on the market. It's just this circular issue of the customer perceived fear of the situation. I think a lot of this is based on customer and consumer confidence. I think that people are not confident in the economy. They're not confident in what's going on around them. And then when they go and look at the real estate market, they're going, well, there's nothing for sale, so I'm just going to wait. So the waiting, I think, is becoming out of people's concern for what they can and cannot do. But when we do put homes up for sale, they sell. When we get buyers, they find houses. It's still working. It's just harder, a lot harder than it was last year, right? In the springtime, we're not selling homes in 2 days with 10 offers. That's just not a thing anymore. It may take us 2 or 3 weeks, and we may be getting asking price or 2% less than asking price. That's happening. We may have to give up some concessions. We may have to do things. It's like Lisa was saying, buyers have different opportunities now. So, but there's still a flow to the real estate market that's happening, but the consumer confidence rating has to change in order for it to go back to what feels like a good market again.
Yeah, well, the fact of the matter is, Kevin, and I'm going to go to John on this. The fact of the matter is that 2020, 21, and maybe the first couple of months of 22, that wasn't reality. That was just a blip on the radar. It was not reality. It was a huge seller's market. People were waiving home inspections. They were selling homes in less than an hour after it was put up with multiple offers. That's not reality. And John Cole, one of yours and my favorite topics are the millennials. Okay, so if the average age right now, the median home buyer age is 34. Okay, that means 27 to 41-year-olds, 1982 to 1996 birth years. They're all in the market to buy homes. That's an upward trend. We like that. So it's really perception versus reality. It's out there. But as Kevin said, the perception is it's a negative market, when in reality, it's not a negative market. It's just because people are watching the news too much. It's because people, as Kevin said, they're not putting their homes on the market, but they will. We know that sooner or later, this is temporary. We know in March, April, maybe as soon as February, people are going to put their homes on the market, right, John?
Yeah, I mean, it's people just have to wrap their head around what's going on out there. Like I think either Lisa or Kevin or both of them said, it's the consumer confidence out there about what is actually happening. I mean, this time last year, rates were half of what they are right now. And people just have to realize that this is our new norm, right? And I hate that phrase because it goes back to the pandemic, but when you're talking about what's going on with inflation, what's going on with rates, and what's going on with prices, it's this is what we're looking at. Rates at 6% are not bad. They're good rates, and just you have to wrap your head around that. You're not going to see 3 1/8, 2.875 anytime soon. And in fact, the only time that we're going to see something like that is another catastrophic event, which we don't want to happen. Nobody wins in that. Yes, you get a really low house payment, but guess what? Everything else goes to crap. So you got to wrap your head around that this is the new norm for the interest rates, that you're going to get out there and you're going to have to start putting your house on the market. We're going to have to start talking about, like we did with Kevin in the spring, about, hey, let's put our house on the market. Let's not close until we found something new. A contingency, like a reverse contingency in the market. Kevin came up with all those great ideas when this all started. And we're just going to have to go back to those basics of getting this stuff done the right way.
Yeah. So summarizing this, Harvey Freed, want to bring you into the conversation. We know the Fed overreacted. Rates could correct themselves sometime next year if we believe what we hear is true. We know that there are plenty of buyers out there. We know what the average age of a first-time home buyer is. We're going to beat that to death at 34. All of this is great news, Harvey Freed. Don't we just, watch this, John, you're going to love this word. as I'm approaching the conversation with Harvey Freed. Harvey Freed, this is all great news. Don't we all just need to be patient?
Patience, okay. I have some clients that are patiently waiting to complete their 21 tax return. And a lot of young couples here, as you mentioned, are definitely looking at buying homes. So it's been really exciting. I think we're going to have a great home buying season. You mentioned, and the numbers show us that there's many buyers out there. So we know inventory will be tight in 2023. If you notice, I don't talk interest rates because, again, people are going to buy houses regardless. And I'm excited about maybe the next 2 months of weeding out the horrible mortgage brokers and fakers and the bad agents out there and all the people that are creating some bad negativity in our industry so that we can move on to business as usual and getting a lot of families into homes.
Well, I'm happy that Harvey talked about that. So we're going to jump right into it with you, Kevin. How do realtors really feel about mortgage lenders, mortgage loan officers? Let's just have a little candid conversation. We've got 3 of the finest. I wish Becky was on this conversation as well. We got some of the finest lenders working out of our office here at Capital Mortgage Funding, brought to you by Fairway, powered by Fairway, top 5 lender in the United States. Been around. You're talking about the difference between experience versus a non-experienced lender and an individual LO. But as a realtor, okay, how do you feel about some of the following comments? And realtors were surveyed in general, and they basically said the lender and the LO can make or break a transaction, and anytime their buyer brings their own lender who they're not familiar with to the table, they're going to have some questions for that lender, and they would rather work with their preferred lender. I mean, just so I want to dive into that because I believe that this is just my opinion. I believe this is all true. I believe communication is the key. I believe experience and knowing how to navigate our guidelines. And I had a conversation with my partner, Dan Burke, this morning, who's also been doing this for 5 decades. It kind of goes like this. If I can't tell, now this is Harry Glantz, and I'm probably speaking for John, but I'm going to let him, Lisa, Harvey, let them do their own thing as I always do. But I can tell within 5 minutes, Kevin Stewart, after talking to a borrower, after getting all their information and running their credit, within 5 minutes, probably less, but I'll give myself some time, 5 minutes, whether I can get this person a loan. What do you think about that, Kevin?
Well, you're allowed to say that because you've been doing it for as long as you have. You have the test. You have the eye test. You have the ear test. You know what to ask, what to look for on a credit report, what kind of questions, what the reactions are like to those questions. You probably can read right through if somebody's giving you the realistic about their income or not. So that makes sense. I think the survey is 100% true. It terrifies me when somebody brings in a loan officer that I've never heard of, especially when they're with a company I've never heard of. That's even more scary. And it causes a pause. And I am the type that I will pause with that buyer every single time and say, hey, you're 100% fine to use your loan officer. That's fine. I get that. Are you willing to have a conversation with one of mine? Because I need to make sure to protect you that everything is done right. Or if you're not willing to do that, I need to have a conversation with the loan officer. I need to make sure they're asking the right questions because I'm trying to protect you. You're hiring me as your broker to make sure that I'm protecting you as well. And it's right. A bad loan officer can absolutely ruin a deal. Absolutely. They don't ask the right questions. They don't look into the right things. They don't qualify properly. They tend to say, oh yeah, I'll get it happen. I'll figure it out. Are you going to figure it out? Because it may not be something you can figure out. It may just not be possible, and that's okay. You need a loan officer with honesty, integrity that's going to tell the consumer what they need to hear, not necessarily what they want to hear. And great loan officers are willing and able to do that and have those tough conversations and say, hey, you can't do this right now, but if you do this, this, and this, then we can reassess and now go forward. That's what great loan officers are willing and able to do. They're willing to have the tough conversation, just like good real estate agents. They're willing to have the tough conversations. So those are the things that are important. And really, any real estate agent will tell you, first and foremost, they won't work with a loan officer that can't prove consistently that they can get the job done. That's that's the number one criteria. Can you get the job done or can you not?
Right.
So panel, I'm gonna tell you how great Kevin Stewart is. This is great. Kevin Stewart is so good. And no, there's no hidden ball tricks. We did not communicate what we were going to talk about to Kevin beforehand. I did not reveal what my bullet points are. So, Lisa, the number one thing that realtors want to know is whether it's good, bad, or ugly. They just want to know the news. Okay. In your experience, and you are a huge realtor partner person, tell us, and I can't believe it. So, tongue in cheek, Kevin, Harvey, John, and Lisa, tongue in cheek, I'm going to say, Lisa Lawson, this still goes on in the mortgage lending world? What?
All the time. I literally got a call just a few days, actually it was Friday, with someone who got approved somewhere else, and she had a bad vibe. Things didn't seem to be moving forward. She wasn't getting callbacks. Then she was getting excuses that these people were out of town for 2 weeks. And so she called and she was like, I don't understand. I feel like we should be closing soon. I was told we closed before Thanksgiving, and come to find out, you can get an automated approval through the system, but it's more than that. So we have an automated approval, but this person has no credit history whatsoever. The only thing that's reporting is a student loan that's in forbearance. So they're not making payments. That's it. So they have no savings pattern of their own. They're very, very young. The DTI is really high. I mean, there's a million red flags on this file. So if you don't have somebody who's willing to sit down and be like, here, yes, you may have had an automated approval, but once this gets in front of an underwriter, they're going to ask for an on-time payment history of something. We pay no rent. We've got major payment shock. All these negatives. You have no savings pattern. You know what I mean? We have no down payment. It's being a gift of equity to her. So there's all these other red flags. And I said, my gut instinct says there's probably something going on with that file, and the person just doesn't want to be forthcoming, right? They don't want to explain. We screwed up. We didn't take the time to get down into the nitty gritty. We didn't take the time to look. And those are hard conversations that you have to have. You have to develop credit history. You can't just, I hate to say, right on the coattails of a credit number. Credit numbers and credit scores can be manipulated. Underwriters understand that. That's why they require that you have some trade lines and that you actually show a payment history of some kind or a rental history of some kind. This person has none of that. I think the only thing that we figured that we could add was a possible Netflix history, but they're not even sure if the Netflix account's in their name. So, I mean, we literally have nothing. So just because the system says okay doesn't mean that it's always okay. You have to have the knowledge to go through it and really look at it. And you have to be honest with the people, saying just because we have automated approval does not mean that an underwriter is going to approve this. This is probably not going to be approved. These are the things that we can do to get her in a position that she can do this in 6 months, 12 months, whatever it is. And those are the hard conversations we have to have with people, whether we like to do it or not.
Yeah, that is the trust. And John, going to you, obviously what you and Kevin have, the bottom line is we preach this for decades. Relationships are the key. And the common bond that you and Kevin have in your relationship, John, is trust, communication, and follow through. Kevin articulated that. We've got it written down. There's a trust factor. He trusts you. You guys communicate really well. And you've always followed through with Kevin. Again, I still, tongue in cheek, don't believe that is really not a common practice in the mortgage banking industry. I guess all the great ones do it, right, John?
Yeah, I mean, Kevin and I were introduced to each other through a common friend / financial advisor. And, right off the bat, I think we both had the same ideologies where how to deal with a client. It's not about the dollars in your pocket. It's about making sure that the client is taken care of. And, you go out there and you get the referral because you did a good job and you did a good job. So I think that's really how we kind of started our relationship. And that, is a great basis for a relationship because you can only grow from something so positive. The number one thing about communication is making sure that you and, I know Kevin's a very busy guy. And his team is what's so important in making sure that everybody is on the same page, because I can text Kevin all the updates I want or email him all the updates I want, but if he doesn't have time to relay that or put it in the calendar or pass it on to the rest of the people that are part of this transaction, then it's not going to work. So he's got such an amazing team with Jacob, Maddie, Kanal, and Erica over there that it just makes it so much easier. And same thing with us on our side is that, his team can communicate with our team to make sure that Jeff and Shannon and Emily all know what's going on and where we need to be with each transaction. And that's what's so important. So would I want every buyer out there, every seller out there to use Kevin? Absolutely. But when someone comes to me with a new real estate agent, it's hard for me to just, say, hey, I want you to talk to my guy, because I would never want that done to me until I've had the conversation with the realtor. And it was just a year or so ago that I did have a guy that was moving here from Colorado, out of state. He was using his sister-in-law who was living in northern Michigan, and she was showing him houses in southeast Michigan. That doesn't work. That doesn't work if you're not a real estate agent in the area. So after a couple conversations with the client, I said, hey, look, nothing against your sister-in-law, but I need you to talk to my guy, because you're missing out on every opportunity that you're going to want to see because your agent isn't in the area. Lo and behold, they made the switch. We got them closed. Everybody's happy as a pig in pie.
Yep.
So that's in a nutshell. Of course, you always want to work with your partners because they know each other. We all work well together. But in the end, it's all about doing the right thing for the client and making sure you're doing the right thing for the real estate and mortgage community.
Yeah, this is the Hardcore Mortgage Real Estate Business Podcast, brought to you by Capital Mortgage Funding, powered by Fairway Independent Mortgage Corporation, Equal Housing Lender. 2289 is our NMLS number, and you're not going to believe this one. Another realtor chimed in on the survey: Harvey Freed, Kevin Stewart, Lisa Lawson, and John Kolb. Harvey, you're not going to believe this. Another realtor chimed in and said, some lenders only work Monday through Friday, 8 to 5. Really? Wait a minute. The business is done at night and on the weekends, Harvey Freed. Who's only working Monday through Friday? The weekends are when we start going. What are we talking about?
On behalf of Roberto, I'm going to make these my final thoughts also, Harry. Actually, these are real documents. I have a CTC clear to close, 8 business days, but I took it from a company called Rocket something. I don't know. But actually, there's another broker involved, and it was
so negative all the time. Negative.
And I tell people, because it'll conclude what we're talking about, it really is important of who you're working with. And this is a real appraisal that was done on August 22nd.
And when are they Harvey, when are they working? Are they working 8 to 5 Monday through Friday? Or are they working at nights and weekends when every one of our realtor partners who's worth anything are working every night, every weekend? Harv?
Well, it doesn't matter how many hours you work. I guess it matters if you know what you're doing. That would be important also. So here at the bottom line, get a great team together. Kevin Stewart and his team's awesome. We have all those great real estate agents on the radio show, and we're looking forward to seeing you, Kevin, this Saturday for sure.
Yeah.
90 on the ticket.
Kevin, one of my mentors told me this when I first broke into business and business in general. He said to me, if you're still making calls, whether it's sales calls, business calls, at 4:30 on a Friday, you're going to have 80% of your competitors beat. Now, that doesn't mean you just wake up at 3 o'clock and start making calls at 4:30. The illustration and the lesson learned was you got to work, and you got to work hard, and you work when everybody else is taking off. In our industry, Kevin, if you're not working nights and weekends and you can't get a pre-approval from your lender at 8:30 at night, that's probably not a lender partner, Kevin, that you want to be associated with.
Yeah, without a doubt. We have, last night, right? Last night we were working on a deal for a client with John at, what time was that last night, John?
Later.
7:30, 8, I don't know. We lost track of the time, but we had a deal and showed the house, wanted to get it together, started making offers. We're waiting to hear back on that this morning, but we had to work with a little bit of speed. We had to get the buyer comfortable. We wanted to get the buyer to a decision because it was important. It's important for him. And so, great loan officers, great real estate agents, great real estate brokers, all the folks that are inside this transaction that are working hard are not just working 9 to 5. This is not a 9 to 5 industry. It never has, never will be. It's just not. And anybody that thinks that it is fooling themselves. And if your expectation as a consumer is that, then you're hurting yourselves. You're actually taking away from what you should be receiving from your team that is supposed to help get you your property. So I think that piece is wild that anybody would work inside those spaces.
Excellent. Last thing I'm going to bring up to you, and then we'll go. And I'm going to start with you, Kevin. We can go ahead and get last words from you. If you see a huge difference in rates, realtors were surveyed. If you see a huge difference in rates between lenders, there must be something wrong. I like that. In other words, if whatever the rates are, somebody comes in a half a point under, 3/4 of a point under, you know there's something wrong. You know there's a red flag. You know they're either charging a lot of points or costs, or they're just trying with you or something like that. Because in our experience, in your experience, Kevin Stewart, rates are relatively within an eighth to a quarter of the same as you go to every lender. If you see a huge difference, as these realtors were surveyed, there's got to be something wrong. And I like that. I think they're smart enough to realize that, Kevin.
I've seen that time after time. I believe that for over a decade. The rates are the rates. Don't choose your loan officer because of who gives you the best rate. Because you can go online and find a better rate. But the truth is somebody's paying for it. And it's probably you. You're paying the piper for that rate no matter what. Like a company just doesn't have this magical, mythical rate that they hold aside for certain people. That's just not a thing. That's not a reality of the industry. So don't choose your loan officer because of the rate. That's not a thing. Choose your loan officer based on the service they're going to give you, the ability to get the job done, the ability to communicate, the ability to work cleanly with your real estate agent, the ability to do all those things, because ultimately, what do you want to do? You want to get the deal done. You want to buy your house. You want it to run smooth. You don't want any surprises at the end. You don't want this magical number at the end that, oh goodness, it changed. Oh, but it's okay. Board, bait and switch. I've seen that stuff for decades. And it unfortunately still happens in this industry. And it's probably going to start happening even more because we're all competing for less business. There's still too many people, and people are going to start using bait and switch and ugly tactics in order to reel someone in, get them on the line, and almost force them tactfully into the transaction. So buyer beware. That's the moral of this. Buyer beware.
Ladies and gentlemen, those are truer words could never have been spoken by Kevin Stewart, Stewart Team Real Estate, downtown Rochester, Michigan. Lisa Lawson, last words for you today.
Yeah, just to piggyback on what Kevin was saying, we all pull as lenders from the same market. There's only one market to pull from. So yes, as Harry said, there might be a difference by an eighth or so, but if all of a sudden you've got somebody giving you an estimate and it's 1 point less than everybody else, or whole interest point less, something's off. There is no special programs out there for just one specific person. Like we've said, you're either buying down that rate and there's going to be some cost there that they're not being forthcoming about, or they brush off the word discount sometimes I know gets people tripped up. They think, oh, it's a discount. So that means it's like being subtracted. I don't pay that. No, that's actually a cost to you. And a lot of brokers kind of gloss over and don't really explain that that's a fee. So be very, very wary. Realize we all pull from the same market. We're all going to be very similar. And really what sets us apart is the customer service, being able to get a hold of us 24/7, being able to get things done for you, running scenarios for you in a timely manner. Those are the things that set us apart. Communication is definitely key.
Excellent, Lisa. John Kolb, last words for the day.
The inflation buster is just a 1-0 buy down. Don't fall into the trap of the advertising that certain companies put on to try to bring you in because they think they made up a product. We all have the same products. There's a reason why they're offering it. They're charging it to you to get it done. Don't fall for the trap. Don't be the sheep that go into the slaughterhouse. And that's just the way that this world is going, unfortunately. And we just all need to wake up and kind of think about things before we do it.
Yeah, I appreciate that more than you know. And Kevin, we appreciate you being on the Hardcore Mortgage Real Estate Business Podcast today. We will see you on Saturday morning, along with John Kolb, Harvey Freed, myself, on Saturday morning from 9 to 10, 97.1 FM. Looking forward to seeing you guys. I appreciate you all being on. And remember, trust, communication, and follow through. You heard it from Kevin Stewart, Stewart Team Real Estate, downtown Rochester. We'll see you soon.
See you guys later.